Investing in the stock market is one of the best ways, if not the best way, to make some serious money. But the investing world seems to be divided when it comes to the analysis of stocks. Some people stick with the old and conventional technical analysis, while others rely on fundamental analysis to analyze stocks. Well, it's pretty much like the Republicans versus the Democrats, but this time it's Charles Dow versus the legendary Warren Buffett. Both sides have their pros and cons, but let us break down both of these approaches and see what it's like. Welcome to 5-Star Finance, the place where we teach you how to achieve financial freedom. Whenever it comes to selecting and analysing stocks, the investing community seems to be divided among the two popular approaches known as technical and fundamental analysis. You won't buy a car without going through and researching its features, price, as well as technical endurance. Similarly, when you go looking for a good house for you and your family to live in, you have to go through multiple complications before you can conclude. When you think that the actual price of a house or a car is varying concerning its true value, you're using the fundamental analysis. Whereas if you think that the asking price of the house is well accounted for with its true value, or the true price and the asking price is close to equal to each other, the same holds for stock analysis. Imagine that we have two financial analysts, namely Eric, who is more of a fundamental analyst, and Rebecca, who is always favouring technical analysis. Now, they are visiting the marketplace and they are looking for good opportunities to invest their capital. Now, Eric is very excited and he goes into each store, analyses the business model, analyses the product being sold, and looks at the layout of the shop to see if they have an advantage over other shops in the same place. Not only that, but he also debates with the manager and asks the manager to bring out the financial statement because he wants to analyse some complexities to invest his capital and then decide whether the company is worth investing in or not. To put a long story short, Eric is looking for a store with the best fundamentals, things like the best product, excellent and easy to access management, and so on. On the other hand, we have Rebecca, who found a fancy spot in the shopping mall and sits on a bench taking good care of her lipstick as well as her hairstyle. She takes out her laptop so that she can take a look at the stock charts for various companies. Rebecca looks at which company has been performing the best based on the price of its stock. Moreover, Rebecca spends some good hours looking at those historical patterns of the stock performance. She is looking for a store with a strong upward trend. She does not care about the company's product being sold, nor does she care about the fundamentals like management, business model, or competitive advantage. She thinks that these fundamental factors are already accounted for in the stock's share price. Rebecca thinks that she doesn't even need to be in the mall to make her choice. Now, Eric thinks that his decision revolves around the company itself and is a staunch believer in the fact that the company he is going to invest in is going to be growing fast in the coming months or years, and he thinks that the stock he is going to buy is priced way below than its intrinsic value, the actual price, and thinks that he just pulled off some profit. He is going to base his decision on the company itself. On the contrary, Rebecca thinks that Eric is being stupid and the historical patterns are telling everything that a value investor needs to know. Rebecca is buying the stock simply because the historical pattern suggests that the pattern is going to shoot up, and not because of anything she sees in the company itself. There is also a possibility that Eric and Rebecca may choose to invest in the same store, but the reasons for their investments are going to be very different. It's simply store layout, financial statement, business model, product, good management, a competitive advantage, going up against historical trends and stock price. Now, every value investor needs to understand that both of these approaches are widely employed by investing tycoons throughout the stock market. When we look at the famous names acquainted with the adoption of technical analysis, it would be unfair if we fail to talk about Charles Dow. Now, he found the Wall Street Journal, which is the benchmark under which all financial papers are measured today. And more importantly, he created the Dow Jones Industrial Index. In doing so, he paved the way for technical analysis. Now, some of the financial tycoons might describe technical analysis as the oldest religion out there for most value investors. And the primary tools which are employed for the usage of this type of analysis are charts and indicators. If Charles Dow is the father of technical analysis, then on the other side of the ocean, we have the legendary investor and also the greatest investor of all times, Warren Edwards Buffett, siding with the fundamental analysis. According to Buffett, a value investor cannot just rely on the traditional charts and indicators. Many external factors are playing their role in the price fluctuations. According to Warren Buffett, fundamental analysis should be the investing way for all value investors out there. A fundamental analysis measures a company's intrinsic value. And now for those of you who are still unacquainted with the idea of intrinsic value, you've got to subscribe to the channel, folks. Intrinsic value is the value of a stock which is determined by some simplified assumptions depending on the company's financial situation. It is of immense importance for both types of analysts, particularly the fundamental analysts. Now, the interesting thing is that fundamental analysts study anything related to security in some way or another. For example, Warren Buffett bought cola stocks because when he was walking through a street, there were a whole lot of bottle caps lying throughout the street. But he noticed that out of all the beverage products, the cola beverage was the most popular beverage among all the fizzy drinks out there. It certainly had a competitive advantage, which showed that it is going to outclass all the stocks of its league. Now, historical trends certainly come in handy, but they are not life and death for fundamental analysts because at the core, they're always reliant on company fundamentals. However, for all the fundamental analysts out there, the ultimate goal is to determine an investment that has long-term growth potential by using fundamental characteristics like business model, management, competitive advantage, financial situation, etc. Either way, both of these approaches have their pros and cons, and it depends on each investor's interest as to which approach he or she wants to employ. When we compare both of these approaches, we can certainly conclude that the technical analysis is somewhat an old and weary method of finding potential investments, and it is reliant on indicators that can sometimes fail to live up to their reputation. Whereas the fundamental analysis is a more secure way of finding potential investments. But both of these approaches can be employed to an investor's advantage. Not to forget that every value investor has his or her own goals and benchmarks. Some are looking for long-term growth stocks by using the buy and hold strategy, whereas the other side is looking for some short-term quick cash using the dividend aristocrats as their investing benchmarks. But everything stems from an investor's ability to analyze stocks. You see, both of these approaches have a common term, and that is analysis. For this reason, we've provided a free ebook in the link given in the description, which will explain the 6 stock categories that are highly important to analyze to make better than average investing decisions. So make sure you make the most out of it and learn all the stock categories. After all, knowledge is what separates the billionaire lane from the ordinary. Check out this video we handpicked for you, and we'll see you in the next one.